back to the discussion, the coexistence of regulation and innovation. I'd like to invite our moderator, Kelvin Ko, co-founder and partner of Spartan Group, and our speaker, Ryan Rodenbaugh, head of APAC of Trust Token and True USD, and of course, Alex Nascimento, co-founder and blockchain lab UCLA, and Sandra Wu, founding partner of Origin X Capital. Please give it up for our moderator panelists.
All right. Well, great. First of all, thanks to everyone who's stayed on, despite the fact that we're at 5, and we'll promise to try to keep this as interesting as possible. To start with, I'd like to get the panel speakers to just give a quick introduction about yourself, why you're in this space, and talk a little bit about what you do or what your organization does.
I'll start off.
Sure.
Is it working?
Yeah, speak loud, I think.
Oh, okay, great. Thank you. I'm Sandra Wu from Origin X Capital, founding partner of Origin X Capital, which is a Hong Kong-based company, but also has roots also in the Netherlands. We are in the sort of legal advisory as well as compliance, transaction advisory world of things. So we help founders and CEOs really help them expand in Asia, whether it be legal, compliance, or regulatory aspects.
Cool. My name is Ryan Rodenbaugh. I'm with the company Trust Token, generally focused on tokenization of assets. Our first product is TUSD. It's a dollar-backed stablecoin traded on 80 exchanges, supported by all major OTC desks and market makers. We launched actually a year ago yesterday, and we've got a market cap of about 200 million. So that's us. Oh, and we're based in San Francisco, but I'm mostly here.
Excellent. Well, I already talked about myself and what do I do. Thank you, guys.
All right, thanks, Alex. I felt that I liked your presentation. I thought you sort of covered everything we wanted to talk about, but let's try to hammer and dig a little bit deeper into some of the things that you mentioned in your slides. So to start with, I'd like to get a sense, or maybe the audience, it'd be helpful for the audience if we sort of got a sense of where we're seeing most of the activity, or where most of the interest is happening, right? Because security tokens, people have talked about it for pretty much the past year, and it feels like a lot of capital has been raised, the platforms are being built, and so where are we seeing interest? Is it in real estate? Is it in, I don't know, tokenized equity, or where are you seeing all the activity from your standpoint?
If I may start, what we're seeing actually in Asia is actually a lot of requests from, say, developers of property wanting to tokenize the development. So they may have land banked, but now they're looking to sort of build the high rises. And how are they going to tokenize that? That's a question that real estate property developers are looking into. However, when you dig a little deeper and you ask them, so where are you looking to do this offering? And they say, globally, we want to do this globally, beyond Asia, into the US, Canada, Australia, etc. Then the next question you ask is, so where are the regulations you want to look into? So it's not just Asia that you need to look into, or Hong Kong specifically, but it's beyond. It's every single jurisdiction you would like to target or offer that security becomes literally a footprint for you in terms of regulatory compliance. So that's when you see the resistance from these developers, where they say, oh, so that's a lot of legal expense that we need to fork out first before we could even offer this. And usually when you tell them the approximate costs and the actual legal framework they need to operate in, that's when they take a step back and go, well, maybe I don't want to do an STO. We'll just go back the normal route of an equity raise.
Right, it's interesting. Yeah.
I would second the comments that Sandra made there. Since I've come out to Asia in October, I feel like a lot of the STO interest I've seen out here has been for non-developed or like really speculative STOs that to me feel a lot more like an ICO with 2 different letters. Whereas some of the things I've seen in the US are already pre-existing pieces of real estate that people maybe want to gain some liquidity on, they want to be able to sell off 40% or something, and those to me feel just like 2 completely different asset classes.
Alex?
Yeah, no, I was having some conversations in Sao Paulo about the exact same point, right? I think that there's 2 points there. Obviously, real estate is the low-hanging fruit that everybody talks about, but then if you don't have liquidity in the market, who's going to provide market making, right? And unless you have a backer to that specific security token that will have deep pockets to provide market making throughout the entire process, and to also promote it like you would an ICO to bring people into the platform. I still feel that we're going to hit on problems like global regulatory disjoints and the fact that we don't have infrastructure to onboard these new investors into a 21st century high-tech way of investing.
So just to supplement what Ryan has said, you're right. With market makers, is it actually permissible when it's a security? Like the typical market makers that you see in the current environment for ICOs, not any, like most of them are actually unlicensed individuals. So the question is, would you only allow licensed individuals to market make a security? And the answer is yes, and there must be full compliance. However, you're not seeing that sort of group of talented people coming into the space to market make compliantly just as yet. And you're right, the regulatory arbitrage play that ICOs did in 2017, 2018 no longer exists when it's in the security space.
Yep.
And Sandy, earlier you talked about sort of the cost of trying to do an offering like that when you involve multiple jurisdictions. Can you give us a sense, however rough it might be, as to what that would compare, with a traditional offering if I was a real estate person trying to, raise capital using an STO format?
Well, actually, the cost will be quite similar in terms of the legal front, because it will be the same legal analysis with respect to a security offering, right?
Right.
The additional cost will be the tech side. How do you code in the smart contract the costs of, say, if we're looking at real estate, the cost of bearing the insurance for any sort of liabilities associated with the building? Can the smart contract code in that dynamic manner, right? Because insurance cost changes often, right?
Yes.
So it increases every year, but you can't sort of statically code it in the smart contract. Will it dynamically change? And these are the things I think as a potential issuer in the STO space, this is something you need to think about. It's not really the regulatory costs, it's more the other costs associated with the technological aspects of the smart contracts, etc.
Right.
Yeah.
And Alex, I thought your comment was interesting earlier when you sort of talked about, the party having been started, but no one's showing up at a party, and the issue is that you don't have the buses to bring people to the party. So what do you think is needed to solve the problem, and how long is it going to take, right? Because we've seen these STO platforms being built. We know there's a ton of issuers that want to, well, maybe not a ton, but there are certainly issuers that want to raise money in this format. But what is going to take to start the party, basically?
Yeah, no, that is a great question. I think that there's two aspects there, right? One is there is a UX UI problem, right? And we're all here in the digital space. So we all know how challenging it is to deal with your private keys and all the shenanigans that go behind holding crypto assets, right? Imagine telling that to your grandfather, who is a real estate investor, or who has been buying US bonds for 20 years. You're trying to convince people of a completely new generation. So I think that education is one, and that was what we proposed UCLA when we wanted to teach a security token class, that education was the first step. And then definitely we need a lot more investor onboarding improvements so that people can go through those 6 blocks that we were reviewing in a more seamless manner. Because if it's hard for you to invest, you just call your Fidelity broker, right? That's easy. There's a guy on the other line that's going to pick up the call and be like, and he's even going to take you to lunch.
Right. Yeah. I thought the Retium app, what it showed on the mobile phone was pretty amazing.
What was pretty amazing. Congratulations to that team. Yeah.
And how's the take up for your security token costs that you're teaching? Are you seeing strong interest from your constituents?
Well, we see a lot of people from the industry signing up, and definitely people from the traditional world of finance wanting to learn a little bit more.
Yep.
There is a lot of interest from institutional investors for us to come in and do corporate training, which, are the people that haven't gotten to the tech party yet and are trying to see what is this all about.
Right.
Yeah. The other thing, too, just to kind of pile on some of your points of when does the party start, for a lot of the different token issuances, they can only trade against other addresses that have also been KYC'd in the same system. And so if everyone is sort of operating on their own token standard, all of these different pools of liquidity, are across 4 or 5 different platforms or exchanges. And so then as a user, to be able to trade on each of these, you'd have to KYC in 4 or 5 of these different venues, which is just another barrier on top of everything else.
Right.
In addition to that, a lot of these will have like a 1-year lockup period or something after the issuance.
Right.
And so then you have a time delay as well, all the initial hype kind of falls away.
And what are you seeing on the Trust Token platform in terms of activity or in terms of or how you're solving some of these problems? Are you partnering with other platforms to resolve?
I mean, one of the decisions we've made has been to sort of actually push off a lot of the security token stuff, just because so much of the regulatory guidance and then just the liquidity as well, it's not there yet. And so we focus a lot more on the currency side. So we have TUSD now, and we'll probably have 5 more tokenized currencies in the next year.
Just to dovetail your last comment, I think definitely liquidity is one of the showstoppers. I think that's what's stopping a lot of people coming to the party. There is no sort of true exit strategy. So what do I mean by that? If you look at T0, they did a successful raise of 134 million last year. It was a security token raise. They pivoted from what they were originally going to do, which was an ICO. They were going to do 250 million for their ICO, but then ended up pivoting in late August last year to an STO, which I think was a brilliant decision. However, if you look at the secondary markets on T0, where they have their token currently trading on their own exchange, what's happening there? What do you see? Little liquidity. On a daily basis, you're seeing no more than maybe, what I've seen in some of the dedicated Telegram chat groups, it's between 7,000 to around about sort of 15,000. However, T0 says the trading volume is close to probably 30,000. So given the benefit of the doubt that, yes, look at the trading volume is around 30,000 tokens, that is only still a very, very minute fraction of their 26 million tokens. So if you do the maths, you're looking at 0.001% of their tokens are actually traded on their own platform. The number of individuals that were accredited investors that participated in that deal was around about 1,000 accredited investors. But if you look to see, in terms of activity, how many of these investors actually registered and are active traders on the platform, you're looking at a handful, couple of hundred. And in terms of new signups, even less.
Right.
So that is a concern, liquidity.
Yeah. So I've observed the same thing on Open Finance, right? There's a bunch of securities traded there, but the daily liquidity, even for things that have been trading for a few months now, is nothing, right? And so you see a bunch of people who, I guess, participated in these offerings, and obviously they've been holding these tokens for a year, sometimes a little bit longer, and you see a bunch of sell orders, but there's hardly any buy order, right?
Yeah.
So it's similar across all platforms. And so I guess the question then is it because of this rigorous KYC functions and people not bothering, or do you think that you don't have that retail enthusiasm and participation in this asset class, and the institutions are not interested or have not come around to convincing themselves to invest in this space?
Well, I think it's a transition is the right word, right? The public and the target audience that invests in cryptocurrencies or started the movement is young adults that are extremely tech savvy.
Yep.
Like the people here in this room, you guys are the most digitally tech savvy people in the world, right? Those are not your traditional family office investors or older, doctors and lawyers who are investing their pension funds. So you have that disconnect there of the target audience.
Right.
And we go back to one of the key points I was trying to make. We're still in an infrastructure building phase. We have all these blocks that are trying to talk to each other, but your point was brilliant. Like, we don't have the basic thing, which is a compliant or at least one protocol. Well, we have ERC 1404 and a few of other those that are trying to come up with something that's standard, but we're still at that first step of deciding what is the standard token. So I think we're still in an infrastructure building phase.
Right. Okay.
To add to that, I don't think you'll see the same euphoric crowd or that viral effect that you see in the ICO space, because with some of the exchanges, crypto to crypto exchanges in the ICO space, KYC is optional. AML is optional. It's not demanded, right, of the issuer or even of the platform. However, when you're playing the security space, regulations and the regulators will come down harshly if you don't do your AML and KYC diligently. So it actually restricts the pool of investors that can actually come into play in the STO game. Secondly, depending on how the STO was conducted, that would also command the resale, like the parameters in which the resale of that token will happen in the secondary market as well.
Right.
So if you only did Reg D type raise with the STO, it means you could only sell to accredited investors.
Right.
That's a killer. Yeah.
Right. Okay. And speaking of regulations, obviously a number of countries are now sort of enacting regulations, allowing STOs. Based on what you've seen, which countries have frameworks that you think are good frameworks? Whether it's the US or any parts of Asia or Europe, have you come across any jurisdiction in particular that you think people should be looking to for STOs?
Yeah, with the regulatory aspect, I think if you're looking to do a security token offering, go with a country that has rigorous, established securities regulations, such as the US, such as Hong Kong. Everything is defined, nothing's changed. You just follow the rules and it will get you there. Yes, it will be an arduous process. Yes, it will be a long, drawn-out process. Yes, it won't be as easy as what happened in the ICO world, where you can get from white paper to listing within 6 months, but it will take a lot more energy and effort to really do that capital raise, but you do it compliantly.
Right.
I disagree with jurisdictions like blockchain islands such as Malta, Lithuania, and Gibraltar. The only reason is with these type of blockchain island type plays, I feel that they don't have the infrastructure right and ready for an STO offering. And the reason is the following. You've seen many articles about the banking situation. It's all good and well you can have a friendly jurisdiction to do the STO. However, the operational infrastructure to support your business is also important. So there's no point in going to a country like Malta only to find out that you can't get a bank account, you can't pay your employees, you can't pay your salary, you can't pay the lease.
Good points. Yep.
Spot on. And I'd say, as an investor, as I imagine some of you are in the room, if you're looking to invest in a project and they're based on one of these blockchain islands, you should, create a much higher bar for that team to have to clear to even think about investing in a project like that. I mean, if they're trying to take advantage of some sort of regulatory arbitrage, there's usually some sort of adverse selection of why they would choose to incorporate in one of those places rather than a place with rigid securities laws.
Yep.
Yeah, well, my specialty is the U.S., right? And I think that agreeing with you, the U.S. has the Jobs Act, which is the Jumpstart of Our Business Act, an Obama act that was instituted that clearly defines that you can go through all the different exemptions and reach a Reg A+, which is a public offering to everyone, and including international investors under Reg S. So I agree with you, the bar is much higher, but you will get there, right? And you will know that you went through all the paperwork that legitimizes your business. The other thing is try to get an investor to write a large check to a project that is in one of these less known markets. I don't know what's going to happen with my money. Right? I don't know if I'm going to be able to take my money out of that market. Try to wire from Belarus to Bank of America and see what happens.
Well, I don't think they'll be able to have a bank in the blockchain island to receive that check, unfortunately.
Exactly, yeah.
Great use for stablecoins, though.
Good point.
Okay, I think we have enough time for one or two questions from the audience. No questions?
No questions.
I think we answered
All right.
everything.
I think we
We're
answered
good.
it all. People want to have a drink.
All right. Thanks, everybody.
Thanks, everyone.
Thank you.
Thanks.
Oh, thanks for that. That was excellent.
Thanks for making it.
Oh, thank you.
Thank you to our panelists and moderator for sharing a security token discussion. We are close.